when I do my analysis, I depend a lot on a combination of volume profile, and then I also use Fibonacci levels. And this is how it works. It's very important for us to understand how it works. And I did a few, for example, for yesterday I called the NASDAQ, as you folks know. I said the NASDAQ has a level here. It's going to go up to the tick, and that's what it did. Same thing with the ES, SPX. I said I have a support level on the hourly chart, which was this here. To the tick, it went back up. But then I realized this morning we have a different view, different idea, it might come back down, etc. That was a retracement that I called to go up. I said it's going to be a most likely short-term retracement. This is from yesterday. See? Same thing with the ES. It might be just a short-term support for the overall momentum, because the overall momentum is down. So today, I was expecting the market to come back down. So I did my analysis. I did whatever. I showed you this is a do or die level.
GBP/USD.
On the NASDAQ, on the ES, NASDAQ has a do or die level, which is here. I did the pound. I said the pound most likely is going to go up. If I look at a short term, euro, same thing. I was expecting a euro up due to analysis. Now, let me explain to you what I do and how I look at it from my perspective when I do my analysis, okay? Let's assume that we have a daily chart, or weekly, let's say weekly. Weekly chart has a trend, right? Going up. At one point, we came down to a level, right? And a lot of people will expect it to go back up. But we have a downtrend. To me, I don't see it a down yet. I don't see it finished yet. First of all, if I do my Fibonacci level from here to here, from the bottom to the top, the prominent two levels, right? My 50% probably is still here. My 62%, which is the main one, is here. This is my 62%, right? Furthermore, these levels, this level here is within a continuation zone as per
GBP/USD.
As per volume profile. This is my continuation zone, for example, right? So in this case, I'm still looking for shorts. My idea is still looking for shorts. So what do I do when I get to this level? How do I pick my next, questions, right? How do I look for more levels? This is weekly. I'll switch to the daily. On the daily, I will focus on this leg. I will see on the daily what is going on. More details. And then to the hourly. So on the hourly, then I will focus on even a smaller level. Could be here. And I will see in this hourly if I have a small trend. So let me see if I could explain this. So let's assume this area is the next slide. Okay, 1 second. So now let's focus here. Remember, I'm still looking for a continuation short.
GBP/USD.
What do I do for that? So let me just erase everything, right? Remember, now we are at that small level, the hourly chart, and the market is coming down on the hourly chart. On the hourly chart, I'm still looking for a short. So on the hourly chart, I will see if I had a downtrend, such as, let's say, like this. And what's next? On the hourly chart, I will look for a retracement. Let's assume this was the top. This is the bottom, and it started retracing back up. I will do my Fibonacci from here to here. I will find levels. Let's say I wanna get, this is my 50%, this is my 62% retracement. on the hourly chart, then I will see which one of these is better, is matching my volume profile. So if I have a volume profile like this, right? And the other one is like this, and it's retracing back up on the hourly chart. Imagine the long-term chart gave me the idea that it continued short because the short was not fulfilled. So I will wait for the hourly chart to hit this area, then I will grab and I will follow the anticipate, confirm, execute strategy, the A strategy. I will pick my short from here. That doesn't mean that, you know, I'm not going to be looking for a retracement long for a quick scalp, probably for the same reason. So there's always that Fibonacci combination. Now, Fibonacci is not something that that is just, you know, random indicator. It is a technical indicator, yes, and you folks know my idea about technical indicators. I have no respect for technical indicators if they are
GBP/USD.
If they are traded as they are without any support, without any volume. But there are some technical indicators, whether you like it or not, whether I like it or not, they play a big role in the trading industry. Why? Because there's a lot of big boys, a lot of trading bots, trading companies, banks depend on a combination of these. One of them is Fibonacci level. They take profits, they add extra layers of entries, they move stops, all according to certain levels of Fibonacci. So overall markets are linked. So Fibonacci levels play a big role in terms of movement, right? And if I combine them with the other indicators that I have, it works very nicely. Make sense? See, the euro on the FX channel, I said something about the euro. I said euro USD long term is not clear. Not clear. I see a long short term towards this price. Excellent, Neil. Very good. I see a long in the short-term view towards this price. Let's examine that. Why do I see a long in the short-term view towards that price? First of all, the long that I see happened already, but I did not catch it. It happened overnight. Look, the volume profile, perfect level of volume profile, rejection zone, power lines helped me, right? Not only that, if I did my Fibonacci from the bottom to top, you see 62% retracement, barely poked, nothing closed below it, and then continued up. So when I called it, when I saw it on this morning, it was consolidating. See this on the euro?
GBP/USD.
It was consolidating. So now, why did I see the level arrow? I said it's going to go up to this price.
XAU/USD.
Sorry, too many lines are hitting. It's because if it retraces back up, right? If it retraces back up, it could retrace to this level. We have on top of it, we do have an attraction level, but it also could retrace to this level because my retracement, my Fibonacci retracement telling me that this is the 62% retracement. It could retrace to 50%. It could retrace to this level, but I chose this level for a reason. And here's the reason. I'll tell you the reason why I chose this level as my favorite profit taking for the long. This was one of the levels, was 50%, but it's already been touched 1, 2, 3, 4, 5 times. So to me, if it goes back to it, it might break it, it goes higher. Once we get to this level, it was another level here in the middle. This is a continuation of a zone. That's why I said this level is my favorite. So we could retrace back up to this level. The good thing about this call is that if you keep doing this and wait for the market to give you a good entry, remember I did not call it when it was going up. I went. This is the best area to call it. Why? Because your profit now is from what your entry for. Let's assume here, this is your profit, and this is your profit. Your loss has to be just below the line. So profit reward, or reward versus profit. You see, the upper box is much bigger than the lower box. Risk reward. So your risk is this much. Your reward is all this much, which is bigger. I mean, I like bigger moves, bigger trends, or bigger views, because bigger profit targets are safer for me. But this is how I do my analysis, and this is how I do my trading. Let's watch the pound US. Same idea. The pound, same idea. But with the pound, when I posted the pound, I said the pound is going to go up to this price. I like this move up, right? I had an idea behind it. And the idea was, if you look at the post, what I posted, let me copy this, right? Let me put it on. Just a second. So what I posted, it was a picture. I said I needed to come back down to this line and this line before I'm comfortable for the long. Same analysis, same thing, right? Look, in reality, it actually came back down to these levels. So now the long is actually more comfortable for me, this area, this zone, right? And I have a reason for this zone, because
GBP/USD.
I'm expecting the market to go up from here to here. Expectation. This lower line, forget it. Don't worry about this lower line. And the entry level, I thought the best level for entry will be a retracement down to a Fibonacci level. So I did this. This was a 68% retracement. You see the middle? So in between, I thought this area would be a good level for an entry. So there you go. Questions? And going back to the Fibonacci levels, there's a reason why on my crude analysis this morning, I mentioned that if I look at my crude, right, where's my oil here? On my oil, I said my level is just below where the line is for the, I said I have a support. See this? It continued down from yesterday's call, whatever, but I have a support zone between 72.13 to 72 area. So which is basically this line here. And there's a reason for it, right? This line here, there's a reason. If I do my price retracement, which is my Fibonacci level, most likely the 78% retracement, which is my least favorite level for retracement, is going to be tested most likely. And once that is tested, then we can see if there's a bounce back up. That bounce could be a short term, long term. I don't know at that time. I have to switch to 60-minute chart when that happens. I have to switch to 987 tick chart when that happens. So I'm expecting the market to come back down to this area, and then from here I'll decide. So until then, I'm sitting on my hands, which means if I am somebody who has an extreme ADD issue with trading, and I'm always want to see action and I want to get in and out of the market, if you follow this strategy, it will keep your ADD or ADHD in check until that level hits. And then, as you see, the pound USD reached target and it bounced down from there. And for the same reason, as you see, the level that it reached was 62% retracement, and for the same reason that we chose to get that target, for the same reason we chose to find a long, it's the same reason that made it bounce down.